Well, today we are looking at potential impacts from Trump's tariff threats, India's decelerating GDP, recent IPOs and listings, shifts in FII activity, global cues, corporate actions like ex-dividends and bonus issues, technical views on the Nifty, currency movements, crude oil prices, and overall macro factors. It's quite a list, actually.
It is. We've got a lot to cover, from international trade tensions to domestic economic indicators and everything in between.
Wow, that's a mouthful. So let's start with Trump's tariff threats. What's the deal there?
Right. So Trump is threatening reciprocal tariffs on India and China. This could really impact Indian companies.
How so?
Well, tariffs could increase the cost of Indian goods in the US, making them less competitive. Think of it like suddenly having to pay a toll on a road you usually drive for free. Less appealing, right?
Right, makes sense. What about India's GDP growth slowing down?
Yeah. India's Q3 GDP growth is expected to decelerate to 6.4%, which is a 4-year low. There are concerns about corporate profitability and overall economic stability.
That doesn't sound good.
No, it's like the economy is hitting a speed bump. The official Q3 GDP data will be released on February 28th. So we'll have a clearer picture then.
Moving on to IPOs and listings. Anything exciting happening there?
Well, we've got 3 new SME IPOs: Nucleus Office Solutions, Srinath Paper, and Bizasan Ecplotech, plus 5 listings this week, including Quality Power Electrical Equipments Limited.
Okay, so new opportunities for investors then?
Potentially, yes. But remember to do your homework. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Good point. What's happening with foreign investors? The FII activity looks a bit concerning.
Yeah, there have been significant FII outflows, about $25 billion since the market peak in September. Last week alone, we saw net outflows of 27,793 crore rupees.
Ouch, that's a lot of money leaving the Indian market.
It is. Some analysts are pointing to a sell India, buy China strategy in play.
So it's like investors are moving their money to what they perceive as greener pastures?
Exactly. And that impacts the rupee, which we'll get to later.
Speaking of global cues, what should investors be watching out for?
Key macroeconomic data releases in the US, like consumer confidence, new home sales, durable goods orders, GDP, jobless claims, the PCE price index, and the Chicago PMI. Also, keep an eye on FII flows and any updates on US tariff policy.
Sure. So basically a lot of economic tea leaves to read.
You got it. Now, let's talk about corporate actions like dividends and stock splits.
Sounds good.
IGI India, Power Finance Corporation, Panchil Organics, and SBI Cards are trading ex-dividend. And Jindal Worldwide has a bonus issue, while OSS Securities and RDB Realty have a stock split.
So what does ex-dividend mean for our listeners?
Good question. It means if you buy the stock after the ex-dividend date, you won't receive the upcoming dividend payment. It's like missing the deadline to get a discount.
Got it. Now, what's the technical view on the Nifty? Is it looking bullish or bearish?
Well, the Nifty formed a red candle indicating high volatility. A break below 22,700 could lead to a downtrend towards 22,500 and possibly 22,000.
So caution is advised then?
Absolutely. It's like the market is signaling some turbulence ahead.
Okay, let's move on to currency movements. You mentioned the rupee earlier.
Right. The rupee has weakened to 86.70 despite a weaker dollar index. FII selling and potential EV import tax reductions are impacting it.
So the outflow of foreign investment is putting pressure on the rupee?
Precisely. It's like trying to hold water in a leaky bucket.
And what's happening with crude oil prices?
Brent crude futures fell by 2.68% to 74.43 cents a barrel, and WTI crude fell by 3.12% to 70.22 cents a barrel.
Lower crude prices, that must be good news, right?
It can be, as it can reduce import costs for countries like India, but it also reflects concerns about global demand. So it's a mixed bag.
Okay, so bringing it all together with the macro factors, what's the big picture?
The market is undergoing a correction and uncertainties remain. There are concerns about corporate earnings recovery and tariff risks. India is lagging behind its Asian peers due to high FII outflows.
So a bit of a mixed bag then, with both challenges and opportunities. Mm-hmm.
Exactly. It's like navigating a maze. You need to be aware of the twists and turns.
Well, that's quite a comprehensive overview. Thanks for breaking it all down. I think our listeners have a much clearer picture of what's going on.
My pleasure. It's all about staying informed and making smart decisions.
Hey, listeners, if you found this information helpful, don't forget to like, share, and subscribe to our YouTube channel for more daily updates.
And remember, always do your own research and consider your risk tolerance before making any investment decisions.
So, any final thoughts for our listeners as they navigate these market conditions?
Just stay vigilant, stay informed, and don't panic. It's a marathon, not a sprint, actually.
Great advice. Until next time, happy investing.
Cheers.